Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. A data light week is keeping markets pretty range bound, with the only major data point being the US retail sales on Thursday. Investors have been eyeing on the Chinese stimulus developments and the geopolitics, meanwhile, with some expectations of large Chinese stimulus building, while geopolitics has been less of a worry, with Israel not opting for a large escalatory move till now. Good morning, GK. What are you watching in the markets? Anything you're keeping an eye on?
Good morning, Swaraj. It was definitely a quiet day, at least yesterday, to start the week with the U.S. Bond markets closed. However, the stock market was open, and we saw U.S. Dow and S&P 500 close at new record highs in a thin market. It's an important week for the US stock market because as many as 41 S&P 500 companies are reporting Q3 earnings. So in the absence of major data, I think corporate earnings will be one focus. But if you ask me, the biggest thing that I saw was the fall in crude prices. Basically, no fresh negative news from Middle East. Then OPEC cutting its forecast for global oil demand for 2024 for the third time running and lowered its projection for the next year as well. We also had the Israeli Prime Minister agreeing to limit his country's retaliation against Iran over missile attacks on October 1 to military targets and not to target the nuclear facilities or the oil facilities. So this was reported in Washington Post, and since then, oil price, particularly Brent, has fallen by as much as 5%, and that's a big relief for risk assets, and definitely some good news for India as well. However, speaking about India, we did see a new marginal low for the rupee yesterday. Unlike, of course, as feared by many, there was no follow-through weakness, sustained weakness after having broken the much resisted 84 on Friday. PSU bank offers were again reported at 84.10 levels. Then the CPI data showed retail inflation surging to 5.49%, well above 5.10% market consensus in September, led by a very large increase in food prices, as much as 9.24% versus 5.66% in August. This, however, should not change the expectation for a Q1 move by RBI on rates. Coming months should see a better improved inflation number because vegetable prices and food prices are expected to drop with the arrival of new crops. RBI's own projection also indicate CPI falling in the coming months and particularly in the quarter 4. So I am sticking to my expectation of Q4 rate cut by RBI. So rupee, of course, I should take cues more from the global markets. Just to point out that FII outflows have continued. It has exceeded 8 billion, but at least the quantum of daily outflows have come down, even as Indian stock markets have somewhat steadied following the global cues. On the global markets, currencies, dollar index made a new marginal high in the corrective phase, and that was at 103.21. Even the euro made a new marginal low in correction at 1.0888, but did not sustain below 1.09 as we head into the ECB meeting on Thursday. We have a couple of important data from Europe today. Industrial production and zoo economic sentiment both are expected to be improving this month after having been low for quite some time. Of course, all eyes will be on ECB rate cut of 0.25, well discounted forward guidance is what we are looking at. As far as yen is concerned, that also tested the 150 psychological level but held. The new PM in waiting, who said on Sunday that will not intervene in BOJ monetary policy, following his slight statement on September 30th, the country's monetary policy should remain accommodative, kind of put the market on cautious note. So dollar yen had no follow through. Anyway, it has seen a good bounce from 141 odd to 150. So I think this is the level where Japanese exporters are expected to sell the dollar against yen. And so I think we continue with the range scenario for dollar yen, upside being limited. Chinese one, of course, weakened more. Today it's trading above 7.11. That's a big jump after combined effect of disappointment over the stimulus not being up to market's expectation, and also a big drop in exports in September, coming at 2.4% versus 6% expected, and the previous month was 8.7%. So, although these are numbers that we are talking about pre-stimulus, but still, I think they are not very encouraging unless the stimulus improves the overall picture. So, I think we should take cues from the actual numbers from the coming months to assess whether Chinese economy is responding to the measures taken by the government. All in all, a weak, a quiet start to the week, picking up bit pace today, and then of course we have ECB meeting and the important retail sales number from US as we head into the last fortnight or maybe 3 weeks before the crucial US elections. Thank you.
Thank you, JK. And just quickly summarizing, US equity markets, they closed at record highs despite the thin markets. And of course, there are a lot of upcoming corporate earnings data that will keep the markets busy. Now, Israeli Prime Minister agreed to limit its retaliation to only military targets and not the crude assets of Iran, which led to some fall in the oil prices as well. For rupee, we saw a new marginal low, but the inflation CPI, it surged to 5.49% in September due to a large increase in food inflation. Ideally, should not change RBI's stance on rates. So Q4 rate cut is still on the cards. FII outflows have continued and has exceeded $8 billion for the month of October. When it comes to the currency markets, one important point, especially for people following rupee, is that the Chinese yuan has weakened more, trading above 7.11 as stimulus measures disappoint investors. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.